Hello and welcome to a fresh new edition of Bazaar Morning Call. I am Prashant. With me, my colleagues Sonia Shenoy and Nigel D'Souza. Guys, hi, good morning.
Morning.
Friday the US markets were down 4% and the market here closed just 1/3% lower. And I was wondering, last night US markets are down 1%, which means by that relative outperformance, we should be up 2% today, right? Just incredible. The global picture continues to be quite poor. There is no real kind of pullback in that sentiment. Negativity is pretty high. So equities are down 1%. The dollar is strong. We'll talk more about that. But the India outperformance, day on day, week on week, month on month, is quite remarkable. And TCS has delivered a pretty strong, not very strong, but compared to the gloom and doom, it's delivered a decent second quarter earnings. ADRs, the tech ADRs are up between 2 and 4%. And that could be the sector of the day. This is something we were talking about same time yesterday as well. And yesterday you had the Nasdaq down 4% as we were opening. You don't have that this morning. And you have these numbers from TCS and that a buyback notice from Infosys as well. So that's the other point of conversation here as we begin a fresh trading session. Guys, hi.
Hi, good morning, Prashant. Morning, Nigel.
Morning.
And I think that comes as a surprise, right? A pleasant surprise.
Yeah.
The fact that TCS did not disappoint this time around. And I think the street would take that with both hands. So these are the two big cues today, according to me. TCS's numbers beating street estimates and Infosys buyback proposal that may perhaps keep the market afloat. And as Prashant said, that outperformance that India has seen, perhaps that could continue. So earnings season has started off on a good note. For TCS, I think what stood out is the fact that, A, they did not change their margin guidance for Q4. It's maintained at 25%. They said there's no reason to change their quarterly deal win guidance as well, although they did cite some caution with respect to what's happening in Europe with the energy crisis, and hence there's not much visibility going forward. Having said that, Infosys and TCS together now contribute about 11% to the Nifty, so it'll definitely keep the Nifty afloat despite all the global chaos, right? There's also valuation headroom for TCS. So if you look at the historical valuations, on a 2-year average, it's traded at about 30 times and currently at 24 times. So that headroom is available. Having said all of that, I think the SGX Nifty is still indicating some amount of pressure because of what's happening across the globe. The Nasdaq has hit a 2-year low, and very cautious commentary coming in from JP Morgan's Jamie Dimon. We'll talk about that as well in greater detail. But the moot point is that he expects a global recession in the next 6 months and a further 20% downside for the S&P 500. 2 days of selling by FIIs, and large selling, might I add, 2140 crores. So it's kind of, I don't know, it's like sort of a seesaw. On one hand, you have good earnings from TCS, the buyback from Infosys. On the other hand, weakness in the global markets.
Weakness in global markets, which is kind of, we seem to be Teflon coated, Sonia, right?
Yeah.
It's just incredible. And that's the point. The texture is trying to buy the dip and trying to hold on to the long side in the hope that the global turns. Even if it doesn't turn, you don't get hurt too much here. That's the point. So the outperformance that we're seeing, what it does is it gives a lot of confidence that, on big down days, big gap downs, you don't want to be, of course, caught in front of a train which is coming super fast at you, but you're not panicky and getting out of positions because of the steady track record of outperformance we've seen through the course of what has been an extremely tough year, globally speaking. TCS is interesting, right? So the Q2 numbers are decent, absolutely. 4% quarter-on-quarter constant currency growth is nothing to be scoffed at in this environment. There is commentary, and I think we'll hear more from the TCS management later. Europe is, of course, a little weak. Long gestation deal closures perhaps need to be watched. This is coming from the management. But the fact is, after this set of results, I think what may happen is that, earnings downgrades on the back of what is to come, that perhaps may take a bit of a backseat. Fresh earnings downgrades. The street may decide to wait for this slowdown that everybody is anticipating to happen and then take a call on what to do with earnings from here. Should they slash earnings more, or it's going to be like what it's been before? I think it will be the latter. People will give benefit of doubt to IT companies, especially after the commentary, which has not been bad at all. I think the bounce may continue. I said this yesterday as well. And as I said, you don't have that headwind of Nasdaq crashing which we had on Friday. It's a more supportive, more constructive environment, although it's been risk-off. Financials continues to be the other kind of hunting ground for opportunities. And you could see that. I mean, IT and banks, especially private banks, were the two areas which continue to be pretty solid. Axis, for example, as a case in point, was up to 2.5% odd. It's a little bit of rotation there as well. For example, HDFC Bank is coming back into the picture. ICICI Bank is taking a bit of a backseat. But that's the area where there is a fair bit of activity. Oil has cooled down a little bit, but just a little bit. I think it's inched up again after selling off last night. So still holding at about 96, but that's better than 90, almost 98, which we had yesterday. Dollar is again well bid. By the way, the US Treasury market was shut for Columbus Day holiday last night. So US market participants were out. I would not give too much credence to the dollar strength. Perhaps today will be a better sort of sense of things. But the dollar strength means that the rupee may continue to weaken. Yesterday, right out of the gates, right at open, when 9 o'clock here, the RBI defended the rupee big time. I mean, they were in the market big time, as Lata was also telling us. Will they continue to do that, try and slow the pace of depreciation? That is essentially their aim, not taking a directional view. That is something we need to watch out for. But we closed at, 82.32, very respectable close. The Nifty, first on the upside, needs to take out 17,421. That is last Thursday's high. That is also the 50% retracement of the entire fall. I'm talking not the entire fall from October last year highs, but the recent fall. And yesterday's low at about 17,064 should act as a good support. That is way off now after the bounce that we had in trade yesterday. So that's the setup for today. IT and financials continue, I think, and IT more than financials, perhaps more bounce there on the back of earnings, what's been reported and what is to come. Nigel, what are you watching on?
Well, the institutional flows first up. We're saying that the FI and the DI, they nullified each other. But the FI gross participation yesterday was 40% lower than what we have seen in the last, couple of weeks or so. One factor that could have played out is that Columbus Day holiday. That could be one. And some of those Asian markets were shut as well. So yesterday's FI sell number actually has come on very, very low volumes. The gross participation was low. The second part is the DIs. They pumped in the big money. They pumped in the highest we have seen in the last 1 week or so. So the institutional number continues to be tracked. That'll be very, very important. Let's see how things shape up today because most of those Asian markets have opened up. And the US markets as well will be back to full strength out there. What are the FIs doing in the FNO market, though? Well, you had one indicator. The futures, it had moved into discount from a premium. That told you there was some short positioning. And that's precisely what the FIs did. They added close to around 14,000 short contracts. And now the short positioning goes to around 82%. Now, the hope is that these short positions get stuck on the wrong side. Where did they add short positions? On the Nifty. Open interest built up out there. But on the Nifty Bank, there were signs that there was some covering in yesterday's trade. And the Nifty Bank, that's the joke on the pack. I mentioned this yesterday as well. You're trying to short the Nifty Bank, you're not making money because from the lows, you're seeing a big bounce. Just take a look at it. Last couple of days, 350 to 500 points bounce is what you're seeing from the day's low. And the Nifty Bank ended closer to around the 50 DMA in yesterday's trade. So if we're looking at levels on the Nifty Bank, well, they as well come up for you on the screen. You like the Nifty Bank to cross the 50 DMA and then move to around that 20 DMA odd. So the IT stocks, they'll kickstart today things in the green. But the Nifty Bank, that's the one that'll have to play a better innings, so to call it in cricketing parlance. Remember, in the last 7 days, the Nifty IT index, well, that's moved up in the last 4 sessions odd. But the Nifty Bank has been the outperformer even on the Nifty. How do you approach trade then? It appears the first level of resistance comes in at around 17,350 because the 17,200 call was very, very active. But the 17,000 put, well, that saw a good amount of addition. So just watch the screen. Those are the crucial levels. 20 and 50 DMA, resistance on the upside, but 16,950 till that level holds out. We have seen in the past that you buy the dip, you'll make money. So why do break that formula? If you get a 150 point downtick, then risk reward could favor you. Global cues, yes, they're a little bit muddy still, but the Indian rupee actually, that stabilized yesterday. So keep an eye out on the rupee. Look to buy the dip if you get a 150 point downtick and hope that what happened in the last few days happens again. Sonia.
Absolutely. I think after all the volatility, that roller coaster ride, the 200-day moving average is intact, right?
Yeah.
So at least that seems to be at least a medium-term floor for the market, that 16,980 level. But a lot of the other technology companies will definitely be in focus today after the management commentary from TCS. So far, what has come through is not too bad. The commentary, that is, TCS says that the annualized attrition has peaked, so the attrition should fall from here on. Even on demand, they haven't given any kind of near-term visibility, but on demand so far, they said that the demand for services continues to be very strong. Of course, they have highlighted caution on Europe and how the energy crisis there could perhaps lead to some challenges in the months to come. But this is the lineup of companies that will be delivering earnings. There's HCL Tech, Wipro, Infosys and Mindtree in the next 2 days. So I'll watch out for these stocks ahead of their numbers. But lots to talk about. We'll have the TCS management in just a while from now, so do stay tuned in for that. Rajesh Gopinathan, Samir Siksaria, Milind Lakkad, all of them will be joining us at about 8:25, so keep it with CNBC TV18. But first up, on the equities front, we have some commentary coming in from Surendra Goyal of Citi, who expects the overall Q2 Nifty earnings decline to be about 10% year-on-year. He expects the margin pressures to start abating across autos, industrials, pharma sector, but significant benefit is likely visible only going forward. He says the key things to watch in the commentary are the festive season outlook, rural trends and the margin outlook. He also says they continue to see risks tilted to the downside in terms of earnings revision momentum, and the valuations remain quite elevated. Surendra adds that the December 2023 Nifty target of 17,700 as a limited upside.
Well, let's get you some money market views as well. This is Bhaskar Panda of HDFC Bank, who says that markets remain nervous as a Russia-Ukraine conflict intensified, and US Federal Reserve speakers repeated their resolve to fight inflation. In this context, forthcoming US CPI data remains important. The dollar index rose overnight, but thankfully oil prices have come down on global growth fears. He expects the dollar-rupee pair to trade in the range of between 82.30 to 82.50 for the day.
All right, and on the bonds, Bhaskar Panda says the benchmark yields have remained range-bound. Lower crude oil prices may help the sentiment a bit. He expects the 10-year benchmark bond yield to trade between 7.45 to 7.50%. Okay, we will take a quick break on that note, but on the other side of the break, our list of top 10 stocks is coming up. Of course, IT will be in focus, but plenty of other stocks to talk about, so don't go anywhere.
Traxon Technologies Limited. Initial public offering of up to 38,672,208 equity shares of face value of 1 rupee each through the book building process with a price band of 75 rupees to 80 rupees per equity share. Bid offer opens on Monday, October 10, 2022 and closes on Wednesday, October 12, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead manager and the stock exchanges.
मेरी कार का कितना मिल जाएगा?
यस सर, OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
क्या बात कर रहे हो?
यही कि OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस। ये प्राइस नहीं, सरप्राइज है।
क्या बात कर रहे हो?
Visit olxautos.in now.
You know, people often ask me why I left my steady job at the call center. I wanted more out of life. So, I launched my own startup. Do you want to know how? Then start up your own business as an LIC agent. You want it, we've got it. Great products, zero investment, leading organization, and unlimited opportunities. So are you ready? Now think big. Become an LIC agent.
Visit our website or contact your nearest LIC branch.
The journey of success has many moments. Some reflect your taste, and some your class. But there is only one that shows you are a class apart. LG OLED, celebration of your success.
You guy, you bought your car insurance from Aqua, right?
Aqua?
No?
No.
It's okay, Murthy. Mistakes happen. No need to check. No, Murthy! No need to check. Murthy, don't think. Murthy, no need to see that.
Before buying a new car, check Acco Insurance Company and save up to 45,000.
Have the
happiness is getting home solid wood furniture this Diwali from insaraf.com, India's #1 solid wood furniture store.
Your health is our concern. Choose network or appropriate hospital. Our telemedicine and customer care team are available to guide you. Star Health Insurance, always at your doorstep.
Welcome back, folks. Hope you're having a good morning so far. The Asian markets are definitely not. The Nikkei market actually has resumed trading after a holiday yesterday, and it's down almost 2%. The Japanese market, that is. Most global markets have been under a bit of pressure, but our own markets have lots to deal with in terms of earnings. So let's get straight to that. Our research team is standing by with a list of top 10 stocks. TCS is top of mind, of course. Rima is joining in. Rima, good set of numbers?
Absolutely. This is a good set of earnings, broad-based, and this should allay street concerns about near-term weakness, which would have shown up in Q2. So constant currency revenue growth at 4%, surpasses expectations, and is also an improvement compared to Q1 levels. Margin expansion at 90 basis points is ahead of street expectation. Deal wins are steady on a quarter-on-quarter basis, and even the troubled geographies of UK and continental Europe, which the street was worried about, has clocked in nearly a 15% year-on-year revenue growth. The management commentary, Q4 margin guidance of 25% stays intact. They believe attrition has peaked out. And even the commentary on the demand environment, deal pipeline has largely remained intact. So even as the macros remain volatile, there hasn't been a business impact as of now. That said, we do not have any visibility from the management about next year, FY24, on revenues or margins. The only concern in the numbers was the net hiring. The net hiring has dropped off considerably to 9,840, which compares with 14,000 in the prior quarter and an average of 25,000 in FY22. And even the attrition, though it's peaked out, has risen in this current quarter to 21.5%. But all in all, it's a good quarter, surpassing expectation and fairly broad-based. Back to you.
Okay, all right, Rima, thanks for that. Remember, you can catch the top team live on Bazaar at around 8:25 a.m. today. Well, Rima, coming back to you though, Infosys, you know, it given us a bit of a heads up yesterday. I think Nimesh as well was working the phone lines. Well, late last night, they have said they're going to be considering a buyback as well. Stock opens in the green. Give us more details.
Yes, so Infosys has said that on Thursday, when the board meets to consider earnings, that's results, they will also consider a buyback. This is something that the street was anticipating. For one, the cool-off period ended in September, which means the company was eligible to do a buyback. And the second compelling reason is that if the company wants to meet its stated capital return policy, the plan, the company needs to do a buyback. The company's capital allocation policy is to return 85% of its free cash flow over FY20 to FY24. But up until now, they've managed to return only 73%, which means it needs to pick up on this, return via dividends as well as buyback. So that's the compelling reason why the street was anticipating that perhaps this time the company could do a buyback. They've done 3 buybacks in the past. The last 2 buybacks were in the range of 9,200 and 8,260. But as I said, one of the brokerages also pointed out, since the company needs to get to its capital allocation policy of 85%, maybe this time the buyback amount could be higher. The last 2 buybacks were open market buybacks. It took about 5 months to complete. Going by that trend, maybe this time it could be an open market buyback too. Back to you.
All right, Rima, thanks a lot for that. So that's on Infosys, but let's move on from IT and talk about India Cements, where one of its subsidiaries has been acquired by JSW Cement. I think you folks were talking about this yesterday on Closing Bell as well.
Well, that's right. Nimesh gave a heads up that, in fact, this is likely to happen. And this is good news, actually, from an India Cements shareholder perspective. Remember, our sister channel, CNBC Awaaz, as well, has said, a couple of weeks ago that this is likely to happen. That's the block, the limestone block that they have currently sold. And the other one is the Rajasthan cement unit as well could get sold. So what's come yesterday is that JSW Cement, they have acquired Springway Mining Private Limited for around 477 crores. They'll receive most of it now, and close to around 100 crores they'll receive towards the end of this calendar year. What do they own? They own that limestone block in the Panna district in Madhya Pradesh. And as per Motilal Oswal, they said they've spoken to the management and they'll receive another 127 crores odd. That's because that was the advance that was given from India Cements to this particular unit. So the total consideration will be around 600 crores. Going by that, the impact is they had a debt of close to 3,100 crores. If they use it to reduce debt, it comes out by close to 20% positive. The promoter intent as well is positive because, this was a block. Now they're clearing up their balance sheet. The street will like that as well. And we'll wait for clarity on that Rajasthan unit, which our sister channel CNBC Awaaz had said that they could possibly looking to sell that as well. So that will be the next trigger, but the stock opens well in the green. That's about India Cements, where Vivek is joining us to tell us about the stocks and news. Vivek.
Well, good morning. Some interesting developments across the infra space, and we are looking at the IRB twins. So IRB Infra yesterday came out with an update as far as the September toll collections were concerned. The company managed to collect close to 330 crore, which is uptick of almost 36% on a year-on-year basis. However, on a month-on-month basis, it has fallen down by around 2.5%. IRB InvIT, on the other hand, has seen again an uptick of close to 40% on a year-on-year basis in terms of its toll collections, coming in at close to 73 crore. And when you're talking about these numbers, while optically they look much higher on a year-on-year basis, it's important to note that last year in September 2021, toll collections were suspended on the back of the farmers' agitation protest. Also keep on your radar Reliance Infra. Now remember, the Delhi Metro was supposed to make a payment of almost close to 4,500 crore to the company as part of the arbitral award. However, it did not make this particular payment by October 4th, which was the due date. However, the Delhi High Court has allowed time till the end of this particular month to come up with a repayment plan. Lastly, keep an eye out for Adani Ports, largely along expected lines. NCLT Ahmedabad as well as NCLT Hyderabad has given the nod for the company's complete acquisition of the remainder of the 58.1% stake in the Gangavaram port. This particular acquisition, remember, values Gangavaram port at close to 6,200 crore, and this particular EV to EBITDA valuation comes in at close to 7.8 times multiple, which compares quite favorably with the listed peers.
Okay, thanks a lot for that. So that's plenty of stocks in focus, but we're not done with the stocks in the news just yet. Vaishta is here to give us a quick roundup of all that she's tracking. Vaishta, good morning.
Good morning, Sonia. The first is Panacea Bio, which has received a long-term supply award, which is worth approximately $127 million, which is equivalent to about 1,000 crores. And this is a contract from UNICEF and Pan American Health Organization. The next stock is Ashiana Housing, wherein the entire 224 units in phase 1 of the Haryana project were booked by the 9th of October. This is a total saleable value of 243 crores and the saleable area of 3.95 lakh square feet. Now, the project mostly consisted of 3 BHKs and 4 BHK units, which were located in the Sector 93 of Gurugram. And the last stock is Trident, wherein the production details for the month of September were out. For the home textiles division, bath linen production numbers on a month-on-month basis were up 12%, but for bed linen and for yarn were down 12% and 8% respectively. In the paper and chemicals division also the numbers were not very good. The paper production was down 4% month-on-month, and the chemical production numbers were also down 5%.
Okay, thanks for that. So here's a quick recap in case you missed out on any of the stocks. Stocks with positive news flow, there's TCS, Infosys, India Cements, Adani Ports, Panacea Biotech and Ashiana Housing. While stocks with negative news flow today, there's IRB Infra, IRB InvIT, Reliance Infra as well as Trident. Let's take a quick break, but all eyes will be on the TCS management. Will they talk about demand visibility? Rajesh Gopinathan, the MD and CEO, and N. Ganpati Subramaniam, the COO and Executive Director at Tata Consultancy Services, will be joining in with the Q2 earnings in just moments from now. Stay tuned.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Suzlon Energy Limited, largest installed base in India as a wind energy OEM, market leader in India with significant experience across the entire wind energy value chain, contributing towards approximately 33% of India's installed wind energy base. The Suzlon Energy Limited rights issue of 2,400,000,000 partly paid up equity shares of face value of ₹2 each for cash at a price of ₹5 per share. Opens on 11th October, closes on 20th October. For more details, refer to the letter of offer.
Well, TCS is going to be the stock of the day, so let's hop across to Rima and Lata. They are speaking with the top brass at TCS. Over to you guys.
Yes, the big news, the earnings season has been ushered in by TCS. And to be fair, it has been a beat across all parameters. Whether you look at rupee revenue, dollar revenue, EBIT, profit, it's been a beat. So congratulations, Rajesh and NGS, for joining us. From me and Rima, first congratulations. But we are going to ask you the more skeptical questions first. It's sort of take away from the performance. Well, Rajesh, the big question that every investor I spoke to yesterday was asking me, please ask Rajesh, how do you look at the downside scenario? You did say that your clients are looking at scenarios. What exactly do you mean by the downside scenario?
First of all, welcome Lata and Rima. It's a pleasure to have both of you back here with us, and thank you for having us on the show. As I said, this has been a good quarter. And we have always been focused on staying very close to our customers and staying very close to the opportunity spectrum. And it's like driving in traffic. When you look at it from a distance, it looks all very, very crowded. But when you drive on the ground, there are enough spaces in between. And if you drive straight, you will pretty much drive safe and go far. And that's the perspective with which we have always gone to our business. So I know that there's a lot of questions about the macro, but we are not well placed to actually comment on it. My only thing would be that to look at TCS not as a proxy on the macro, but evaluate it from the lens of a good business run well. And towards that, even though I say myself, I have no doubt that on behalf of all my colleagues, we can say that we have done a commendable job. And we stay very focused on doing that. So our ability to comment beyond that is limited. And there's nothing incremental that we can add to the spectrum of commentary that is out there about all the various scenarios and all the positives, negatives, all the stuff that. So I would like to hold back on that.
Okay. No, I'm sorry. I'm persisting only because I want to get some color. You may not be able to give numbers, obviously, but you speak to really a large segment of, BFSI, retail. So if you can give us some color on what exactly did your clients tell you? Did they say we cannot speak much about Q1 next year? What did they tell you? Any verbatim quotes without naming the clients?
Well, Lata, we called it out last quarter also. We said there is an increasing cautionary tone in our clients' discussions. That is not resulting in a project cancellation, or they're not saying that we are at panic stations. But there is that caution, and people asking around, what are you hearing from others? Actually, a lot of that happens, that you're saying we have an order backlog, but what are you hearing from the others that you are meeting? And that kind of a drumbeat is building up. From our perspective, when you go into a planning season like the next few months, with that as the backdrop, the chances are that the next year's plans are likely to be weighed on the downside. That doesn't mean that people are not in an active, cost management phase yet, where they're pulling back significantly. It is just a question of how they are reprioritizing. So even if you look at cloud, there was a lot of enthusiasm on cloud from the board level onwards. Now, if you look at the news flow over the last 6 months or so, you would find that a lot of that has gone off the radar. Right? We are now into the trenches of actually executing on many of the things that were spoken about. And that's a good space for us because, yes, you lay out the future roadmap, but the hard work needs to be done. The first 20-30% gets shifted. But the real difficult area and the place where we differentiate ourselves the most is when you start getting to the next 30% and the next 30%. That's when the heavy lifting starts. And like in any other business, typically the value realization is always at the tail end of any such transformation. The first 1/3 is cost burn, or rather you're investing. The value realization comes at the bottom end.
That's probably the tailwind for you.
That's the one. So news flow goes away, excitement goes away. That doesn't necessarily mean that business goes away. It goes into the trenches, and I think we are well positioned to be able to execute on the actual value of the transformation that we still believe in.
Got it.
But you need to get those workloads in there. You need to get the refactorings done. You need to run the optimization to be able to capture the new dynamics of the new operating environment. Then you will realize the benefits.
Fair.
And I would say that as we look forward into the next 6 to 12 months or 18 months, we are going to go to a period of execution focus, of operational rigor, of not about news flow, but about actually getting the work done. And that, I believe, is TCS's sweet spot.
Fair.
And that's where we believe that, yes, we need to be vigilant. Yes, we need to be. But overall, I think that we are in a good place. We have a credibility with our customers, and their plans, we have not seen them pull back. They have stopped talking about it, but they're not pulling back because it needs to get executed.
Okay, got that. But your raw material is still manpower. And, NGS, the latest employment number we got, unemployment number, as low as 3.5, it's never been so good for the American worker. Now, your, on-site workers would be about 25-30%. Won't that continue to be expensive? And, higher attrition and therefore higher wages, and therefore a problem for margins?
I think, all said and done, all on-site markets, right, whether it's US or Europe or UK, they are supply constrained. Okay. So to that extent, depending on the quality of resources, people with the market knowledge, client knowledge, industry knowledge, they'll always come at a price point, right? So our model is about constructing a team of multidisciplinary skills that are required to execute the project. Some are on a high-cost location, some will be on a low-cost location, so that the overall value proposition from a cost perspective as well as from a technology perspective is attractive, and at the same time it is it comes without any added risks to the project of execution. I think we have been doing that very well. In a way, that's our secret sauce, right?
Yeah, but it's not you don't expect it to tell on margins. You were very confident about 25% margins by the end of the year. And I think Samir even said 26 to 28 is very much on the anvil. But it has to get postponed, isn't it? If labor is so scarce and expensive.
See, first is that, it's about being closer to the client. And what promises that we are making on every execution, make sure that is going well, right? And in the process, there is an operational rigor that ensures that we do it without wastage, without taking unnecessary risks, and see how much of automation can be done, how much of predictability that can be brought into execution, so that we deliver well. And once you deliver well, and you know how to take the juice out and actually to deliver the margins that we need out of that project.
Rajesh, could you tell us, in the current quarter, which were the segments, pockets where you saw growth moderation? You spoke about insurance, but were there any others? And a follow-up is that in a downside scenario, which other segments would get added to that?
Riva, good question. So insurance, as I said, was a... the reason we called out is that insurance was the only weak segment in the US market, and that to PNC insurance. And we are giving that it's not always green, there will be pockets of weakness. From what we are seeing in the macro, this time the weakness is likely to come through from the manufacturing side rather than from the financial and the services side. So the GFC, the weakness came first from the financial and the market side. In COVID, it came from travel industry, those kind of ones. This time around, if the weakness starts, it's likely to come in from the manufacturing side. As energy, supply chain disruptions start. So we need to be wary of that. Within that spectrum, we see US manufacturing doing very well. We see some amount of caution on the European manufacturing side, and that bears watching as to how that plays out. And we need to be careful about how we are positioning on that. So it goes back to, again, that it's not a macro game. It's about what is our exposure, how are we doing, and within that setup, what are we doing for those customers, and what programs are we engaged with, what's on the pipeline. Even going back to the point that you just discussed with NGS, the on-site labor needs to be seen in the context of our requirements of what we were wanting there. Yes. In a scenario when there is a lot of excitement, especially at the senior most levels, about some technology, new technology, speed becomes a big part of the value. People want to show something very fast, 30 days, 90 days, the board is interested, everybody is excited. The speed of execution rather than the certainty of execution or the optimization of execution becomes the bigger commodity. At that time, you need to become a lot more dependent on quick turnaround, close contact. I believe that we are crested that wave. And because there are no new technologies we are speaking about. Cloud we have been speaking about for the last 2-3 years. All the excitement is now settled in. Yes. Now comes the actual work. That work can be optimized in various delivery models. So it's not the same labor scenario from a demand side that we see into that market. So the game has to be played, based on where you are and what the pathways available to you are. That's why trying to reconcile that with the zoomed out macro is a very difficult task. 3.5% unemployment on a 125 million workforce is still quite a lot of place there. So we don't need that. We need a few hundreds and thousands.
And just one question. Now everyone's looking ahead to January to get clarity on next year's budgeting cycle. But if there is so much uncertainty, is there a possibility that we will not get an answer in Jan? Your clients may defer the budgeting cycle by a couple of months, maybe 3 months, maybe 6 months. Is that something your clients are telling you?
No, I think most organizations that we work with, especially the large ones, they have a very rigorous process of planning for the future. Within that, with so much of uncertainties, at best, their planning horizon can get shortened to, let's say, every quarter and adjusted on a rolling basis for the subsequent quarters. From our interactions, what they have been telling us is that, look, the programs that you guys are executing, some of them are long-term, some of them are short-term, but then there is no pressure on those programs. Okay. When we ask them, are you going to cancel any of these programs, right? Resounding answer we got from our clients is a no, right? So which is giving us some comfort in terms of at least, the next 2 quarters, I don't see any big issues.
What about embarking new programs?
The new programs, especially the long-term commitments, we see some softness, right? If we are talking about, let's say, a multi-year execution kind of a programs which we typically deal with, there is some amount of softness, some amount of, decisioning might get deferred, right? If I can use that word. But it's a function of, how this next 3-4 months is going to pan out, especially from a European perspective. If there are going to be energy crisis, if there are going to be factories are going to be shut down, and so on and so on. Then the other thing that we are also hearing is that, look, there is a recession or there is a inflationary pressures. If I'm going to get some costs because of that, should I be passing all the costs to the consumers, right? Some of them feel, no, they have an obligation, a societal responsibility not to pass on all the costs. So they're doing all these scenarios, right, in terms of figuring out how that should be.
Are they asking you to bear part of the cost burden since they can't pass on the entire amount? And then what does it mean in terms of price increases?
Is there a sense that billing could be a...
No such discussions have taken place. But then, our model is always to be with the client, closer to them, react to situations, be with them in good times and bad times. Make sure that the overall long-term relationship is taken forward in the right direction. If it means that we have to give in to some of their requests, we will give in. But then, in this business, I've seen it for the last 4 decades. Whatever goes out comes back many times over.
Okay. All right. Well, we're going to ask you little more about the verticals. But before we get to that, Rajesh, we saw the Tata Group in a consolidation mode. 7 steel companies have come together. Do IT companies also come together?
Yes, is much better.
No, between
I think it's more of, are we on the same value?
And
Tata Networks, and you're now heading Tejas Networks.
Tata Technologies. So
the question is, are you on the same value chain or are you on parallel value chains? We don't have a dependency on any either upstream or downstream.
Okay.
So there is no immediate impact from that perspective. From the perspective of whether it makes sense for both sides, that we can see. But unlike some of the other industries, we are not, on the value chain, we are not distributed. We have an end-to-end control over our value chain.
Okay, that gives a part answer. Okay, Rajesh, to come back to what Reena was asking about verticals, you spoke about insurance being lower. Haven't the BFSI clients told you that they have to be more cautious or slow down? I mean, JB Diamond was on our channel clearly saying that, he sees recession here and that's the biggest banker you get. Credit Suisse already having problems. So BFSI should have hinted more to you?
These large banks, their total spend in tech and ops is north of $10 billion. And we make maybe 100 million, a few hundred millions out of them. So what happens on the margin might have some amount of intermediate pressure, but it's not. So that commentary needs to be seen in the larger context of their business, whereas the value that we provide to them is across a full spectrum of both growth and optimization. So I'm quite confident that we have a value proposition in all scenarios. We have a value proposition in their growth scenario. We have a value proposition in the transformation scenario, in their compliance scenario, in their risk management scenario, in their consolidation scenario. So it's a question of being able to address that, and we have the credibility with our client base that we can have that conversations. And I think we are well positioned, and our clients also understand us well. And we are fairly, focused on who we are and what we do. And I think that has resonance across the full spectrum.
So insurance and manufacturing, you said, not so much BFSI you would mean in terms of a slowdown next year.
Capital markets are volatile. They will be the first to react.
Yes.
But the question, what I said, as an industry, it's unlikely that capital markets can survive even if trading goes down 50%.
Sure.
This deal win guidance, quarterly run rate of 7 to 9 billion, is it only till FY23 comes to an end, or do you think this is a sustainable medium-term kind of a guidance?
I think it is sustainable. And we should be, both it is sustainable and we should be targeting that to maintain some momentum. But that 7 to 9 is a comfortable band for us.
Would you fear it could be on the downside of the 7 to 9, considering that people are taking longer to decide, which is what you said?
See, overall, our qualified pipeline as well as the overall pipeline looks good. Right? We are working on a mixture of deals, and it's broad-based. It's we have deals coming from emerging markets, new growth markets, as well as the established markets across verticals. It's not that, look, it's concentrated in one vertical and not in the other. So that gives us the confidence and comfort that, yes, we are in the right track, we have the products, and we have the services footprint to actually convert them and as we move along. And I think 7 to 9 is a good range to operate in at this point in time.
Just one more question about this possibility of discounting. I know you have long-term relationship with clients, you treasure it, you value it, and therefore in hard times you may have to give discounts to your clients to support them. Are there more instances that TCS or the tech industry has to give discounts today because of the way macros are unfolding versus, say, 6 months back or even a year back?
I don't think so. I mean, we are not in a... see, it becomes material in a scenario like COVID, when there is a sudden downturn and there is across the board pressure, then these things become material. Otherwise, in the regular, ebb and flow of business, some things will be given, some things will be taken. That's okay. That's the normal flow of things.
So nothing unnatural in terms of discounting or price increases.
Okay. Rajesh, do you think more generally, not related to only IT industry, investments in blockchain, which require a lot of money, even 5G for that matter, could that slow down because people are uncertain?
I see, you have to look at it from a perspective of risk capital. Risk capital towards some of these emerging technologies is likely to slow down. But some of the core investments in these technologies is likely to continue. Our participation is more on the core investments. Okay. Our participation is less on the risk capital. So from our side, I think the environment is likely to be a continued investment into blockchain, 5G, etc. Whereas at a market level, you might see a fair amount of volatility on risk capital coming into these areas.
Yeah, well, just a final question. You said in a very, say, maybe a quarter ago in the interview that we are a B2B company and our goal, our vision is B2C. Any progress at all on that, NGS?
A lot of thinking is going on, for sure. And I think, much of what we do can be repurposed. It's not impossible. But at the same time, if you look at our own the digital technologies, if we have to be relevant, you just can't operate only on a B2B basis. Our solutions that we are providing to our B2B clients, we have to imagine their business scenario on a B2B2C basis, right? In that context, that much of the solutions that we are delivering also attempts to on the consumer side of it. So wish as well, right?
Okay. Many congratulations, Rajesh and NGS. Thank you very much for joining us.
Thank you. Thank you very much.
Thank you.
Well, you heard it from the big bosses. After this break, we will be speaking with the CFO and the CHRO, that is, of course, Sameer and Milind. We are back in a minute.
यूं ही नहीं मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। कुशलता की कार्यशाला में तराशा जाने वाला हीरा हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
Different ages, different stages. Get best protection with Star Women Care Insurance Policy. Always at your doorstep.
There's more of us in the squad today. There's a young one in the crew. There's a big boy in the gang. There's more color in the tribe. More styles in the wardrobe. We may look mean, but we're still the safest guys to be with. There's more punch, more legacy, more wow in us today. The original rock stars are rock stars still. But there's one thing we will be today and every day. New, now and forever. Tata Motors, new forever.
हमारी कार कितने में निकलेगी?
सर ये वाह यस सर OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
सुनीता सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
बाबूजी सुना आपने सुनीता क्या बोल रही है?
ये सब यही बोल रहे हैं कि ये प्राइस ही नहीं सरप्राइज है। Visit olxautos.in.
Get the grip of good health even after 50. Presenting now Star Health Premier Insurance Policy. Always at your doorstep.
A moment can start a movement. One ripple can start a wave. Avanti, forever mark. A diamond is forever.
दादा आप फ्लाइट कहाँ बुक करते हो?
इक्सिगो।
ट्रेन?
इक्सिगो।
बस?
इक्सिगो।
साइकिल?
इक्सिगो।
ज़्यादा बोलिए।
बड़ो ज़्यादा बोलिए।
और कौन सा ऐप डाउनलोड करना चाहिए?
इक्सिगो।
और निकल लो।
Your health is our concern. Choose network or appropriate hospital. Our telemedicine and customer care team are available to guide you. Star Health Insurance, always at your doorstep.
My journey of insurance and investments began at the same time, when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high.
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ.
This festival, bring in Nissan Magnite. Big on dreams. Bold in passion. Beautiful in every drive. Rush to the nearest Nissan dealership now.
You guy, you bought your car insurance from Aqua, right?
Aqua?
No? No. It's okay, Murthy. Mistakes happen. No need to check. No, Murthy! No need to check. Murthy, don't think. Murthy, no need to see that.
Before buying a new car, check Acco Insurance Company and save up to 45,000.
Welcome back. We now have another set of the top brass of TCS. We have with us Milind and Sameer, the CHRO and the CFO. Gentlemen, thank you very much. Sameer, I'm going to delve straight away into the numbers question. No more big picture. The margins, you said you're confident you'll get to 25%. But is it going to be easy to improve next year, considering that, you know, there are problems of attrition, there are problems of high-cost labor in the US. So what's the scenario next year in terms of margins?
Okay, let's start with Q2.
Yeah.
And delivering 90 basis points from 23.1 to 24, I think is
was
credible.
better than street expectation, not taking away from it.
And our immediate priority is to exit Q4 at 25. And as you rightly said, there would be a combination of things which would play out in FY24. Both we'll have our usual increments coming in, and we'll have discretionary expenses also coming back, and we'll have to balance that off with either from productivity, either from utilization improvement, realization improvement, and that is something which over the years, if you see, we have been able to manage it, and that's a task on hand, and we are collectively, as I said it last time as well, we are collectively in it to do it.
So, Sameer, can you get to 25% without any further benefit from rupee? Because if the rupee becomes a tailwind, again, in Q3 and Q4, can you surpass 25%?
So, Rima, inflation, currency, all of it is something which we take it on our
Not a
P&L.
3.5% kind of average increase that we've seen.
So, let's take it that way. Currency is not in our hand. We expect it and we build it into our model, but we'll take it as it comes. Even if it goes on a appreciating trajectory, we'll have to build it into our margin. Okay. And our 25 intent is irrespective of where rupee goes.
No, how much is dollar and non-dollar?
How much is dollar and non-dollar in terms of revenue mix? Yes. So approximately 55 to 57% is dollar, and euro and GBP will be a combination of 25 to 30%.
Yeah, it looks like at least GBP and pound will not punish you as much as it has done.
Let's hope so.
Okay, Milind, I wanted to ask you about attrition. NGS just told us that about 25 to 30% are on-site workers. And the unemployment levels in the US are so low. So would not attrition continue to be an issue and high wage costs because of this element in the developed markets?
Okay. You are talking only about US or in general?
More US.
No, I think our US attrition means obviously has been more than what it has been. But the differentiation of what it has been versus what it is now is less than what we see in other geographies. Okay. So I don't see that as much of a challenge. From a wage standpoint, yes, there is a slight increase in wage in US, but I think that is something which we manage through a proper mix. And because we actually are also getting a significant number of trainees in the US nowadays. So US trainees, workforce coming from locally.
Cost more, no?
trainees
compared to what they would have cost last year or year before.
Yeah, but the point is, we also basically see differentiation in the pricing. When people move and do different things, we actually expect that to happen. But even that pricing, actually, from where they start to where actually eventually the market is significantly different.
Milind, I want you to comment on the tech industry, and this is not a TCS specific question.
Yeah.
There are a lot of reports about companies, tech companies, large ones, mid-caps, delaying the onboarding of freshers. There have been instances where the variable pay has been less than, maybe what was promised or what the employees anticipated. What, according to you, is the reason for that? And what is happening?
I can comment about TCS first. Is it okay if I?
Yes, but then do tell us about what's happening in the tech
all
industry.
right. So I can only speculate like the way you can, but on the other part.
No, you can do it better.
Okay. But I think the point is we actually are. We have, like I said earlier also, we have 100,000 plus trainees last year, 35,000 now, already looking for another 12,000. Honoring all the offers, across the board, not just in India, in the geographies as well. So, we don't see any challenge from that standpoint. Variable pay, no, we actually have been paying 100% until last quarter. This quarter also, 70% of our people will get 100% variable pay. 30% will get based on the business unit performance. That is about TCS. In general, there are industry as a whole basically means different sized companies. Scale is obviously makes a significant difference for us. If it is a smaller size company, obviously some of those things will be felt. We are able to manage it reasonably well because of our model, because of our culture, efficiencies, and also obviously scale. All of that comes together and make it happen. But the point is, smaller companies definitely can have a bigger challenge on this front, considering today's situation.
What hits the smaller companies now can come to you next year. Is that a likelihood?
I do not see that happening in the near future at all, because I think we have been managing our supply side challenges. What we have seen in the last 2 years and how we have dealt with it, it gives me a lot more confidence of how do we deal with it in the future.
Are you upping your fresher hiring target? It was 40,000. You've done 35 plus 12 in the pipeline would take you to plus 50, 52.
47, 35 plus 12, 47.
47, sir.
47. So, that's the plan right now. The 12 is also in the pipeline, So, we'll decide at the end of Q3 and beginning of Q4 if we need to do more.
So you have upped it, right? From 40 to 47 is a given.
Absolutely.
And at the end of Q3, you will decide whether you want to increase it further.
Increase it more.
For the market outside, the big number is that you're hiring less than you hired last year. That comes as a bit of a shock, in the sense, as a bit of an indication whether you don't have enough work for next year. Samir, any comments?
Sure. So if you look at the last 2 years, in FY21, when we had a flattish revenue growth, we had approximately headcount addition of 10%. Last year, we had 15% growth. We had almost 20%. So we have significantly hired ahead of times and invested into the capabilities or capacity building. And then we have invested incrementally on organic talent development. So I think that is what is now helping us in terms of flexing it as needed.
Samir, can you talk about the pricing of deals, particularly in Europe and UK? Is it under pressure?
So pricing overall remains stable, and there is nothing specific to call out across geographies.
Even in Europe and UK, it's stable?
Yes, absolutely.
So even if clients are getting hit, they're facing inflationary headwinds, etc., they're not asking you for...
So technically, they are investing into technology on various demand drivers which we have consistently called out upon, and on that, on a overall basis, we don't see any impact on deal pricing.
In some geographies, subcontracting will go up.
Subcontracting, we expect it to come down in general. In general, because the fact is some of the visas are basically better. US is still a challenge right now. Other geographies are doing better, so we expect it to come down in the coming quarters.
One question, Milind, based on the math of calculating LTM, the 12-month period, etc., what will LTM attrition look like, exit LTM attrition by Q4 FY23?
See, I think if you look at how the LTM is calculated, and if you look at the numbers, what happened in the last 2 quarters, even if we reduce significantly in the next 2 quarters, the numbers, LTM number will not come down in a big way. It will still be around 20%, I would say.
Around 20%.
Okay. Then we have to call it a day, not the least because the markets are about to open and they will pass their verdict on TCS. Thank you very much, Vivek and Sabir, for joining us.
Thank you, Lata.
Thank you, Rima. Thank you. Thank you.